Hey everybody, let's not waste any more time and jump into exactly what we see that's going on, what's triggering all of this collapse right now. We call it the CryptoPocalypse and what is behind it. So this is, of course, edutainment, never financial advice. We're looking at Bitcoin dipping under 2,300 again. Things are not pretty out there by no stretch of the imagination. So what's going on? We have this situation right now with what are called cascading liquidations. And it's a cycle that's played out several times in the crypto market. And liquidations are triggered over an overheated, over-levered marketplace. But this time it goes deeper. Liquidations hit things like Lido, Maker, and others today. We'll talk about Tron too. We'll talk about Celsius. And today is a story about, in light of the recent history with Luna, it seems like other shoes keep dropping. It's like the cryptoverse is not getting a break. Cryptoverse is leveraged, it's staked, and it's a fragile place. And back in the day, we used to call this financial contagion, and it's ugly out there. So let's call this DeFi winter. Welcome to DeFi winter, everybody. We had our DeFi summer. Now it is DeFi causing a lot of this contagion as well. Traditional markets are also terrible. Gold fell $50 today, which gold has the best macroeconomic backdrop you could possibly imagine. And it's tanking as well. So the key thing to think about is centralized finance has overwhelming greed. DeFi has no judgment. It's purely mechanical, purely built on computers and data. The consequences, take your pick. Which one would you prefer? So we're going to dig into that today. That quote, I think, words that effect is from Bankless today. So let's first of all talk about what happened with Ethereum. Ethereum did have a flash crash on Uniswap as a collateral dump. This caused a lot of alarm. There was a flash crash. It fell all the way down to, I think, $950 from about $1,200, $1,250. And a whale sold their Ethereum holdings to pay off about a $73 million worth of debt. I think it was on Oasis app, the DeFi lending platform. And again, another DeFi trigger here. Cascading hits as price goes down, more liquidations happen. And that's kind of the story of today. And the duration of the sell-off saw ETH's liquidation price dropping. Again, a huge chunk down into 3 digits, which Ethereum hasn't been there for a very long time. But there's more. A big part of the alarm yesterday is Celsius suspended withdrawals. CTO Larson had a great piece on this earlier today. And the question is, do we believe, you can read it for yourself here, do we believe Celsius is insolvent, or is it a bank run situation? Is it a liquidity crisis? Who's to say at this stage? Who knows? Many believe they could be buying time to retrieve the liquidity to be able to enable withdrawals again, because a lot of stuff has been rehypothecated. We'll talk about some of that and some of their positions as well as we go through this. And their operations require one-to-one lending, so they have the ability to unwind their rehypothecated positions, but it takes time to do that. And in order to free up liquidity for withdrawals, this is what I believe they're doing. And I'd look to Alex to make a statement very soon. Thank you for the text last night. He said, do not be concerned. So we hope everything's okay with Celsius, and I hope we can trust your words. So the good news is a huge part of this is because of the stETH here. A lot of people didn't know what stETH was a week ago. Now it's staked ETH is now the buzzword of the day. And this is its peg actually since January 2022. And you can see it's been all over the place. It was actually very volatile. It was below these levels back in early January 2022. And the good news is, our theory is we believe this cannot unravel. So the staked ETH basically is a way of letting people access liquidity from their staked ETH. And ultimately, once Ethereum does go to proof of stake, this will be unlocked. So it's not like there can be a death spiral like as we saw with UST back in the day. And our theory is arbitrageurs will take the risk. If the peg goes beyond a certain level, like we see, it's actually, I was looking at it just live a second ago. Give me 1 second. And now I can't see it. But it was it bounced, shot up to 96, 97, which was a good sign. But I believe if it does fall to a certain level like 95, 90, 80, 85, arbitrage will jump in and take that risk because they know Ethereum will eventually go to proof of stake. So it's just about buying the time. So that should be arbed away. So there is not much more, hopefully, downside risk for staked Ethereum. And now the situation with Celsius is basically this. And the Block Crypto had a good piece on this with some good data. But to summarize, think of the Celsius flow, just real simple terms. On-chain activity showed the Celsius transfer clients Ether. So if you deposit Ether on Celsius, they put in Lido Finance. And then they deploy the underlying staked ETH collateral for additional yield generation. Celsius holds about 409,000 staked ETH in its wallets, and that's worth about $500 million. Now, Curve Pool also contains about 120,000 ETH paired against 515,000 staked ETH, which is a highly unbalanced ratio of about 19% ETH to staked ETH. So one of the problems we have there is it's not easy to unravel this position because there's that mismatch, the imbalance. So when you have a run on the withdrawals because of all the attacks, made every Celsian very nervous, everybody's running for the door, and hey presto, it's no longer able to liquidate the positions quick enough. So it's what's called a classic catch-22 situation. So where we are right now is Celsius cannot convert the staked ETH without an over-the-counter transaction, i.e. somebody who's willing to swap it. And that would probably charge a particularly big fee for. Now, Celsius owns many tokens that we just covered, but adding fuel to the fire, staked ETH has lost its supposed parity. It's down to 0.97 as we speak. And so that's, if they were to trade it, they would lose. Well, they'd have to dump a lot, which would drive the price down further. And that would exacerbate losses, which is not good. So basically, Celsius can't sell ETH on Curve unless it wants to really crush the price down. But the point is, there is value there. We'll talk more about the value that others see in a minute too. So let's talk about the wrapped Bitcoin, Celsius wrapped Bitcoin exposure and maker. This was another one from Dirty Bubble Media flying around here. And it talks about where they are. Celsius has about 18,000 wrapped Bitcoin leverage in Maker Protocol. This faces liquidation at 22,584. Coincidentally, that's pretty much where we got to today. But what Celsius did, they upped their collateral on the Maker Vault, and now I think their liquidity price is approximately 18,300, which means Celsius has a leeway of about 12,000, 13,000 wrapped Bitcoin to play with. So again, no big exposure there. But what about Maker DePegging? It's very, very unlikely because nearly all of the DAI generated by Collateral is USDC, backed with another 14% or so being USDC derivatives. Only about 12% is Ethereum, and the Collateral ratio you can see here is 130.6%. So there should be no risk of that happening as well. Now, let's talk about what else is happening in the marketplace. First of all, BlockFi CEO Zach Prince tweeted, it has zero staked ETH exposure. Everybody's trying to distance themselves from this calamity and not alarm their customers because a run could happen on any of these firms too if they were attacked. And Kirill Nikolov, a decentralized finance strategist at Nexo, said to the block that Nexo holds only a limited number of staked ETH, so they have no exposure per se. It's tiny, very, very marginal. And Nexo is Swiss run, highly conservative, and a good risk management in place. Speaking of Nexo, they stepped up. I read the term sheet, letter of intent. They offered to buy crypto assets from Celsius. So who knows what could happen here. There was a tweet from Alex over the weekend that confused a lot of people. He mentioned Celsius 2.0 or the new Celsius. I can't remember the exact words. But maybe this has been in the works for a couple of days. We'll see. So let's talk about maybe some other stuff that could happen. And the other shoe that could drop is Tron. I hope you don't mind the little Tron logo we put on this red shoe. And why Tron? Well, Tron is cloning Luna. Not only did they clone Ethereum, white paper word for word, but Tron is now copying Luna's decentralized dollar, UST. And they were offering, I think, I remember 40% at the beginning, and they just ratcheted down to 30%. Now it's 11% yield on their USDD. So let's look at Tron for a second. The Tron USDD did lose the peg over the last couple of hours. causing panic. You can see here it's down around 0.999%. Let me zoom in and try to find exactly. That's a bit of an eye chart. Yeah, 0.99, 0.98, but you can see it fell as low as 0.97, losing about 3% earlier in the day. So there is a lot of anxiety out there, and this could be very similar once again to what happened with UST. So how is Tron fighting this? So the Tron DAO reserve said on Saturday it bought 50 million worth of Bitcoin and TRX. It says they are 200% over collateralized, but that does not appear to be true. And a short squeeze typically occurs when traders are betting on a decline or are forced to close their positions by buying back the underlying token. So Sun noted that the so-called funding rate for shorting TRX on Binance had hit 500%, which is extreme. So a lot of the big shorters, maybe hedge funds, whoever's behind this, is jumping on shorting the hell out of Tron right now. That's why they're willing to pay such a high premium, because they're that convinced it's going to go down and follow the same path of UST and Luna. So let's talk about the unraveling and how it looks. So far, this is a post from resdegen, and he says it's starting. It's starting, first of all, the first yield cut from 40% to 30% to 11%. Who the heck would take on risk in this market for 11% yield after everything everybody has seen? So they are probably going to have some liquidity problems. And USDD is currently 92% collateralized by the reserves, even considering TRX funds. But the problem is, if you take out TRX, the collateralization ratio is only 73%. And the $400 million of USDT are not really USDT. They're JUSDT, which is a completely different version. So it may also have no value. So that is the danger here for Tron. And this is an interesting meme. Thank you, Sanjay, for sharing. Hard times create stable coins. And then stable coins create good times. Good times create unstable coins, which we've seen a lot of. And unstable coins create hard times. So we're living through this. We're in the fourth stage right now of this Roman Empire, as it were. So let's talk about other rattles across the markets. Exchange rattles here. Binance resumes withdrawals as many retail crypto investors monitor exchanges. They did pause withdrawals for, I think, 24 hours or 48 hours, which rattled everybody. Now people are worried about things like Coinbase and Kraken, and investors are monitoring very carefully. Never before has the not your keys, not your coins mantra been so important. So there's also concern with smaller lending platforms. This is from Vauld. We have some people in the community that were able to transfer off of Vauld very successfully, but others are having some type of delay right now. Not causing any alarm, but just this is their service department saying it's purely because of the increased number of withdrawals happening currently. Please do not panic. We are in the process of clearing it, and you'll receive your tokens at the earliest. It took 8 hours to get that response, but at least they're responding. So where are we now? Now, let's talk about Bitcoin for a second. The Bitcoin news. Yes, markets are very heavily rattled. Fear and greed is not as low as it should be, considering all the stuff that's happening. The macro world is a nightmare, and it's far worse. A lot of the sell-off, both in equities and crypto, and the cascading effects of everything we see, what I just spoke about, has exacerbated the impact of that unexpected CPI print we had on Friday, which kicked everybody in the teeth. But let's talk about Bitcoin treasuries of note that are underwater. And for those of you who are underwater, you're in good company, because so is the president of El Salvador, so is Michael Saylor, CEO of MicroStrategy, so is Elon Musk, CEO of Tesla, and so is Jack Dorsey, the CEO of Square. You can see El Salvador 2,300 Bitcoin, average price of 45K. Their DCAing has probably been the worst. Very sorry about that, Bukele. And he's been pretty good at buying the dip, but misplaced a couple of things and didn't get in early. He was a latecomer to the party. His average price is 45K. Price today, last time I ran this number, is 23. Well, so slightly lower than right now. It's about 23,100. Loss is $50 million for the country of El Salvador, but apparently they brought in about $1.6 billion in foreign investment over the last year. MicroStrategy, 129,000 Bitcoin, average price 30,700. They are nearly over 900 million underwater right now, nearly $1 billion. And the stock is showing that as well. Tesla, 42,000 Bitcoin, average price 31,620, very similar to the MicroStrategy price. and they're $1/3 billion exactly underwater. And Square, 8,000 Bitcoin, average price 27. Jack Dorsey has been the best DCAer out there. He's only 30 million underwater. And again, he's building an entire revised Square, which is now called the Block, all around Web 5 and Bitcoin infrastructure. So watch that space carefully. That could be DeFi 2.0 or 5.0 or whatever. He has some extremely interesting plans. Let's talk about a couple of analysts and what they see. First of all, cheers to the real Plan C. Stay well, buddy. He talks about Bitcoin entry risk. And here he has all of his different tiers. He actually has entry risk going all the way up to 100, which is ceiling, the ceiling model, which is somewhere where you don't want to buy. And they are represented here by the bands, And we are now, according to him, at risk entry level number 1. Now, the bottom line is the bottom green line there. Typically, it is, as he says, I think it's a 5-year exponential moving average. So we've seen historically, we only hit this once before, and that was in March 2020. And here we are again. But there are other analysts that see things as well. First of all, Glassnode, we've got this thing called Bitcoin realized price. The realized price of Bitcoin is $23,435. The Bitcoin price today is $310 under that exact price right now. And it's rare in this market. If you count the number of days that Bitcoin has been under realized price over the last 5 years, it's literally a handful of days. It is not very much at all. What's also interesting to note is how we actually bounced off 22.6 today and went straight back up to that realized price. And now we're a little bit underwater again, but we'll see. It is the fear and the cascading losses that are keeping people away and making people very nervous out there. Now let's talk about Will Clemente. But not all are staying away. Will Clemente got most of his bids filled today. As he says, it may not be the Pico bottom, but he was happy to allocate for the long haul. He's got a very long-term view, and he exhausted his dry powder. The Bitcoin realized price was one of the triggers that got him to jump in. It was also the 200-week moving average was tapped. FTX and OKX quarterlies are in backwardation, and it was one of the lowest deviations from the 200-day trend ever. So tick, 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 all his boxes. Time for him to jump in. And finally, it is per Blockchain Center. This is called a Firesale price. And coincidentally, it pinpoints exactly the Celsius wrapped Bitcoin maker liquidation price of about $22,604. That is, according to this rainbow chart, the Firesale price. Ignore the white box there. I pulled this off their Twitter feed today, but I copied the black box, which is the correct version. And at the time when they did this earlier today, it was 24,000. But the fire sale did hit 22.6. In fact, we bounced off that 22.4, 22.5 level right now. So it is ugly out there. But, as people say, it's always darkest before the dawn. Hang tight, everybody. Thank you all for being here. And be kind to each other. See you all soon.